Hi friends, my name is Rahul Jain. I'm a SEBI registered research analyst. In the last few weeks, a lot of correction has happened in the Indian stock market, mainly because of the West Asia war that is going on. A lot of you ask me that, Rahul, in these times, how do we know which stocks have corrected deeply? How do we know what are the valuations of these companies? Are they trading at a discount? Are they trading at premium in terms of the valuations? So I thought I'll create a very simple video and give you step-by-step process of going and building a list of stocks that have corrected. Okay, we'll use a few parameters so that you get a complete clarity, and I'll keep it extremely simple video. Okay, if you're new to my channel, consider subscribing to my channel. And with that, let's get this video cracking. So how do we go about building a list of stocks? First thing, I'm going to ticker tape. Okay, I've given you the link in the description and in the pinned comments. What you do here is go to screener first, and here you will find stock screeners and mutual fund screener. Right now we're interested in stocks, so I'll simply click on stocks and say start screening. Okay, now I'll see a lot of companies' name coming up here. The reason I am not showing you the names of the companies here is because every single minute the data will change, the list will change, right? Because the price of the stocks fluctuate heavily during these correction times. It's a very volatile market. There is no point in looking at the list here. It's very important that you learn the method so that you can go and do it yourself anytime you want to do it. Okay, that's the reason I'm not showing you the list of stocks. Now the first thing we will do is get rid of all these filter criteria here. Okay, just keep a clean list here. So I'm just going to remove everything from here. Okay, I've removed everything, just kept the market cap here, and that is what we are going to start with. Our first parameter is we are only looking at stocks that have a certain market cap, and you can decide your criteria. For simplicity, I'm going with any companies that are trading at above 10,000 crore market cap. Okay, so if I type in 10,000 here, it is going to give me a list of around 520 stocks. So almost I have got large cap, mid cap and small cap. 520 stocks is what I've got, more than 10,000 crore. You can adjust it as per your need. Okay, that is parameter number one. Parameter number two will be that we are going to look at the correction, right? Now, the correction wise, you can look at various parameters. One of the simplest one I'm going to use right now from a timing perspective is show me the last 1 month returns. Okay, so this is going to give us the data in terms of what has happened to the prices of these stocks in the last 1 month. Okay, now here what I want to do is I want to only look at the corrected stock. So I will say any stock that has gone in negative in the last 1 month, present that in the list. Okay, so I'll say minus 67% for example here, which is the highest drop, to 0. And if I do that, I get 403 companies. So imagine out of 520 companies, 403 companies have gone down in the last 1 month because of huge correction in the Indian stock market. In fact, you can go and see the stocks that have given the positive returns in the last 1 month by simply saying 0 to whatever. Okay, again, you can play around with these screeners, and that is the beauty of using these screeners, because you get good idea about what's actually happening in the market. Okay, now this is my second criteria. It doesn't tell me much because I've got a list of 403 companies. What do I do with this? Okay, 400 plus companies have corrected. How do I get to, let's say, 20 companies out of this? For this, what we're going to do is we're going to use multiple combinations of valuations as well as fundamental parameters. Okay, third parameter that we are going to use is, let us say we want to look at only those companies where the 5-year average return on equity has got some meaningful values. Okay, so here I will select 5-year average return on equity, and for that I'm going to say give me stocks that have got at least 10% of 5-year average return on equity, right? There is no point me looking at less than 10%, so I do 10%, and straight away I get only 251 companies here that have delivered on an average return on equity which is more than 10%. Now this 10% could be 12%, 11%, 9%. It really depends on you. You can just play around with this. I've gone ahead with the rounded number of, let's say, 10% or more. Okay. Now the next fourth criteria that I want to use is from a valuations perspective, right? Out of these 251 companies, how many companies are trading at a premium and how many companies are trading at a discount from a valuations perspective, right? For this, what I'm going to use is I'm going to use a filter. Okay. So I will type in here PE ratio. Okay. And you will see here pro filters. One is PE premium versus subsector. So if I come down here, you will see this one here, PE premium versus subsector. What does this simply mean? What is the stock that I'm looking at? What is the PE value of that, which is price to earnings, right? And what is the subsector's price to earnings, so that I know whether this stock is trading at a premium, then the subsector, or whether it is trading at a discount than subsector. Now what is this subsector? Subsector, in for example, let me actually show you the subsector. So if I come up here, you will see sector. Sector is, let's say, financials. Okay. Within financials, you will see private banks, public bank, asset management companies. These become the subsectors. I hope the concept is clear. There is no point in me comparing a private bank's P ratio with, let's say, consumer finance company. I would rather go and look at private bank versus private bank. That gives me the relative valuation of a company versus its subsector. I hope the concept is very, very clear. Now, this is a pro feature. Okay, so PE premium. So let me go and say PE premium versus subsector. Okay, you can see an asterisk here. Okay, that tells you that this is a pro feature. Now, pro feature is paid feature on ticker tape. I've been using pro features since 2022 now, almost 6 years now. And if you want to use that, you can use my code and use my link. You're going to get 45% discount on the annual plans. Okay, extremely massive opportunity for people who want to get a bargain opportunity. Go and grab this. The link and the coupon code is given in the description and in the pinned comments, right? So what I'm going to do is add this filter here, and simply when I add this filter, you will see that I get two values, discount or premium. So I'm going to go with discount, assuming that I'm a value investor. So I said discount. Out of 252 stocks, now I get to 120 companies, 128 companies. And here all of these companies are trading at a discount from a PE perspective compared to its subsector. Okay, you can see the data here, 9.57%, 48%, etc. Okay, the next one I'm going to use from a valuation perspective is a similar one. Rather than earnings, I also want to look at price to book. Okay, so I'm going to say the same filter, which is PB. So let me go and say PB premium versus subsector. Again, it's a pro feature. And here I'm going to look at price to book value, compare this with the subsector, right? Again, very, very simple logic. The reason I'm using both PE and PB is that I want to look at both the valuations. One is looking at the earning side of the thing. Other one is giving me a lot of information about the book value. Okay, both are important. Like for example, in the banking sector, you would rather look at the PB ratio than the PE ratio, right? So here again, I will say discount. Give me the discount. I get to 87 companies now, which are trading below the subsector valuations, right? So far, I have used how many filters? 1, 2, 3, 4, 5. 5 filters I've used and I've got to 87 companies. I want to get to, let's say, 20, 23, 25 sort of companies, which are manageable in terms of my further research. So I'm going to use a couple of more filters. Let me walk you through them. So far, if you're liking this video, request you to hit the like button. Let me know in the comments a simple thank you. And if you're able to understand what I'm trying to explain, let me know. If you have any questions, also let me know, right? The next filter, what we are going to do is add another filter, and we are now going to look at EPS growth rate. Okay. So 1 year historical EPS growth rate. Now, why am I interested in the earnings per share growth rate? The reason is very, very simple. If a company is trading at a discount from a valuation perspective, we also need to see whether the earnings have grown or not. Because if the earnings have not grown, it might indicate that there is a problem in the company in terms of earnings, and that's why the company is trading at a discount. We don't want that. What we want to know is that the company has done some growth in their EPS, but still it is trading at a discount, maybe because this is a misplaced stock. That is exactly what we want to find out. So I'm going to go and look at 1 year historical EPS growth rate, which is going to look at the earnings per share for the last financial year divided by the EPS for the financial year before this -1, which is going to tell you what is the growth rate, right? So if I do that, add this filter here, and we are only going to look at those companies where the earnings per share growth rate in the last 1 year historically has been more than, say, 10%. 10% if the company has grown its EPS, then I think I am simply okay with that. So I'm going to say 10%. Again, you can adjust these figures according to your own needs, right? Now we come to 48 companies where historically the EPS growth rate has been more than 10%, right? Now history is history. What about future? Can we look at the EPS growth rate in the future? Because please understand one thing, stocks trade at a price looking at the future growth rate also, not just the historical growth rate, right? Very, very important point. Okay. So for that, what we are going to do is look at another filter, which is going to be, can you see 1 year forward EPS growth rate? Now this is again a pro feature here. I will add that here, but please understand that this is an estimation. It is not guaranteed. It is a forecast. It is an estimation, and this estimation could go horribly wrong, or this estimation could be really, really a good estimation. We don't know because nobody really can predict future accurately. So make sure that you understand this is just an estimation here, but at least we get some view, right? So I'll add this one here. And again, I would say, give me those companies where the estimate for now is more than 10% of EPS growth rate. Okay. By doing this, I get to 22 companies, right? So I've used almost 7 filters and I've got to 22 companies so far. What is it telling me? It is telling me that these 22 companies in the last 1 month have corrected surely. Their valuations are at discount versus their subsector. And then I have looked at fundamental aspects as well. For example, return on equity, 5-year average, more than 10%. And we have looked at the EPS growth rate as well, whether from an earnings perspective, the earnings are growing or not. 1 year historical and 1 year forward. 7 parameters and gives me a list of 22 companies. Now, does it mean that all 22 companies are good companies or are these bad companies, right? Now, please understand one thing. Whenever you do your research about stocks, you have to go down to individual companies' detailed report. Okay. What is actually happening in that particular business? Qualitatively, what's happening in their management? What did the management say 1 quarter back, 2 quarter back? What is the sentimental analysis of that company, right? That is what you need to do. This list doesn't really tell you much. Yes, of course, we have gone down from 500 companies to 22 companies using a specific parameter. Okay. So we need to do further analysis. Now, how do we go about doing further analysis? Now, every investor is very, very different, right? What you look in a company versus what I look in a company may be very, very different. But let me quickly give you a summary of how can you go about looking at these companies, right? Give you one example, okay? More importantly, when you look at the subsector here, you can also filter these out by subsectors. Okay, you can look at, for example, I want to focus on private banks, right? Because you maybe in your portfolio, you do not have any private bank or the allocation is lower. Let's say it's only 5%. You want to take it to 20% or whatever. Please understand, a list of stocks does not mean a portfolio. A portfolio means where you have curated stocks which are balancing each other, where you have certain portfolio rules applied. One of the important rules, for example, is that I do not want to have stocks which are from one particular sector and that crosses more than 25% of my portfolio, right? You do not want to rely on one particular stock sector or a one particular geography for that matter. Because if you go very concentrated, then you're taking extremely high risks, right? What happens all of a sudden a particular sector that you're going very heavily aggressive, let's say 80% of your portfolio is in one sector. What happens if it pops? What happens if there's a crash in that? You might be sitting there for years trying to recover that money. Therefore, you can look at the subsectors here very easily. Pharma is there, mining is there, consumer finance is there. We have got list of stocks from various sectors. Important point, I wanted to reiterate it so that you understand it. Okay, now let me quickly show you how do we go about looking at these companies, one by one. I'll give you a couple of examples if time permits. So what I'm going to do is select one of these companies and show you how I will go about looking at that company, right? So let me click on this particular company here. Okay, and I'll open it in a new window here. And first thing that people look at is the price points, but you know what, ignore the price point for a minute. Straight away go into the financials. Okay, so go to financials and here you will see income, balance sheet, cash flow, etc. Right? All of that information is there in one place. In the income, generally I look at annual growth view. Okay, so here you go quarterly or annually. You can do both. I'll go with annual growth view here. And what you see is that how in the last few years the company top line and the bottom line has been growing, right? So for example, 22-23, it grew by around 15%, then 11%, then now 8.60%. Now trailing 12 month is around 10%, right? So almost 10 to 15% is the range that the company is growing from a top line perspective. From an earnings per share perspective, again, you see 21% growth rate here back in 22-23, then 33, then 16%. Now trailing 12 month is 24%. So last 12 months have been much better, right? That's the sense we get. Now here you might need to make some forecast. Again, you will have to look into the company's annual reports and the quarterly con calls and come up with some guidance, right? Maybe let's say that the company grows at around 15 to 20% of EPS in the next 3 years. Okay. So the question you need to ask yourself is if the company's earnings per share is going to grow at, let's say 15 to 20% in the next 3 years, what is the PE I'm paying right now? So for that, go to peers here and you look at the PE ratio of the company around 23 here. Okay, so the question you need to ask is that, am I okay to pay a PE of 23 for a company that is growing its EPS, let's say between 15 to 20% in the next 2 to 3 years? I think it's not a bad deal at all. Okay, if you have the holding period of around 2 to 3 years of time period. Now, another important point to consider is that in the next 2 to 3 years, what could go wrong with the company that they may not grow at 15 to 20% that we have seen in the last 2-3 years, right? For that, again, you can go and look at some sentimental analysis here. Again, nobody can tell you the future, what could happen. Even management can't tell you that. But at least you can look at some of the challenges here, right, for the company. So for example, margin contraction could be one of the concern here, right? Credit cost and profitability could be one concern. But from a positive side perspective, is the demand likely to be there? Again, you can go and look at these, parameters. How's the demand looking like from a trend perspective? You can read about that. What about the investments and product development that the company is doing? Because a lot of these factors will decide whether the company can continue to make some good earnings or not, right? Again, you will have to do some sense check about the market expansion, export growth, etc. And you arrive at, overall mota look at whether the company really can achieve 15 to 20% of the growth rate. And if the company doesn't, and if the share prices fall for whatever reason, then do you have the capacity to, downward average at that point in time? These are some of the questions you need to ask yourself. And when you do this analysis, you will get a clear answer. We have already done some good checks on this company in terms of the filters, but we need to look at holistically, right? Coming back to financials, you can then also look at the cash flow. Very, very important, is the company generating positive cash flow or not in the last few years, right? 2023 better, positive, 2024 positive, 2025 negative. So you need to ask yourself, is that because the company is putting a lot of money in the capex, or is the company burning operational cash? What is the reason? This is how you will have to peel the layers of the onion here so that you understand what is exactly going on. Sentimental analysis, financials, very, very important. Two important aspects that you must look at. And then also look at the news in terms of what is actually happening, what is driving the stock prices in the last few weeks or months, right? So that you understand the negative side of it, positive side of it, and accordingly make a holistic decision. Of course, do the peer comparison as well, right? Look at the similar companies in the sector. Okay. What are the valuations that they are trading at? Relative comparison is also important. What is the management saying, right? You can go and look at the con calls, right? If I come back here, financials, and you look at the company updates here, you will look at the annual reports here, you will look at the con calls, look at investor presentations, wherever the data is there. And accordingly, you make a decision whether this company is right for you or not. Again, I've sort of scratched the surface here, haven't gone into detailed analysis of these companies because this video is going to go very, very lengthy if I start talking about each and every parameter. But you get the point here that you start from 500 companies list, you get to 20 to 20 companies, and then accordingly you do your analysis at individual level. I hope you like this video. I've given you the link of Ticker Tape if you want to use the pro features of Ticker Tape. If you don't want to use the pro features, then Ticker Tape is absolutely free. You can go and explore the platform yourself, look at the stock screening, you'll look at the mutual fund screening as well. And if you decide to take up the pro membership, then you're going to get 45% off on the annual plan if you use my link and the coupon code. Go and explore it now, and I will see you in my next video. Until then, keep rocking.